Good morning, Mitch.
Buenos dias all.
Buenos dias.
Lionel and I got the gray shirt memo. What's up with the rest of you guys?
Hey, next time send us the memo as well.
Come on, Jeff. You're killing me, Jeff.
Representing for the team.
Sure.
Always good seeing you, Mr. Hess.
Good morning, everyone. We'll be getting started in just a moment. Denise, you may have to turn your camera back on again, as every time you hop into a Zoom meeting, it resets the settings.
Huh? No, the camera doesn't work now.
Try clicking the camera.
No.
Try clicking the camera, the camera button at the bottom of the page, at the bottom of the left, next to the mute.
Do we have to turn the camera on?
Yes, ma'am. Yes, ma'am.
You are the reason for the season, Denise.
Yes.
Hold on, I gotta open my camera thing. Okay.
There we go. Awesome. Okay. So thank you guys all for joining us. I know some more folks are going to be trickling in as we continue on with the program, as we get started with the program. But we would like to get started so that we can give you guys some of this great information. The event is being recorded, so we'll be able to share that video with you guys after the end of our presentation. We'll attach it to a follow-up email that will go out with the information and our contact information for our Realtors team that can assist you as far as realtors goes, as well as our expert, Denise Ogata, who is joining us today. So you'll be able to access the video content. You'll be able to get in contact with us. There will also be a link for a job form, which is a questionnaire with a few questions in regards to your current circumstances that will help our expert best decide which programs you may be qualified for, or we can also guide you in the right direction to the right lenders. So we'll go ahead and get started. Let me go ahead and share our screen with our presentation. Give it a second as it shares. Awesome. So again, thank you guys all for joining us. This is Realtors of Fresno County with the FresnoCONNECT Homeownership Initiative, and we will be joined today by Denise Ogata, our amazing lender expert with Tri-Counties Bank, who is also one of our wonderful partners for this initiative. So thank you so much, Denise, for joining us today. We want to share a little bit more with you about our mission, but before we go into that, I'm going to hand the floor over to our chaplain, Mitch Shaw, who will get us into prayer so that we can start this morning off right.
Awesome. Thank you, Aisha. Thanks to each of you guys for being here. My prayer is simply that there is hope for everyone that is on this call. I know that many times as we are trying to do something that maybe we've never done or that hasn't been done in our family, it seems hopeless. So I pray that the information that is shared today would provide hope. I pray that there would be endurance, that you would continue on this journey, fight through the getting your credit repaired and going through a scenario that maybe you've never gone through. But again, my prayer today is hope, and that as you go through with that hope, that you would have peace. I pray a blessing upon each person that can hear my voice, their families, and all who are near and dear to them, in the name of Jesus. Amen.
Amen. Thank you for that. And our past president is joined with us today, Lionel Okovi. Do you mind sharing our mission with the team today?
Absolutely. Good morning. Thank you, Madam President. Good morning, everybody. Of course, this initiative is a design initiative with high level of comprehensive home buyer education and counseling, financial literacy, first-time home buyer workshops, down payment assistance programs, grants, and flexible mortgage products program for the communities of Greater Fresno. These are all designed to help you. The purpose of the initiative is designed to increase the homeownership rate in our community. And so that's why we bring these experts here on these calls to educate you about the various opportunities out there for you to become a homeowner. So we're excited today for Miss Denise Ogata to give us some very, very valuable information.
Awesome. And Jeffrey Hess, our amazing realtist, who is real estate agent and well-rounded individual because he's also an appraiser. So you know that you have some amazing people that are fighting for you on the end, valuing, putting appraisal values on these homes and have your best interests at heart. So Jeff, do you mind introducing our realtist team?
Yeah, thank you very much. My name is Jeffrey Hess. I'm a realtist, so I help people buy and sell homes here in Fresno. I'm excited to be part of this organization. I have been for a very long time. We're very mission focused, and buying a house is not easy. And it needs someone that you vibe with and someone who understands your wants, needs, and desires. And that's really where we bring our focus and expertise to try and help people find homes. And so we're happy to offer this program. And among our members are our board, including Aisha Allen, our president, Lionel Akpovi, our past president, Krishna Lott, our second vice president, Rosie Lopez, our treasurer, Glorious Beautiful Me, the first secretary, Tamisha Steele, our second secretary, Mitchell Shaw, our excellent chaplain, and Annette Dios, our parliamentarian. We're really excited that everyone took some time out of a very busy day. I know it's Mother's Day weekend. It's not always easy to find time, but the way you find a home is with diligence and with hard work. So being here today is really the first step on your progress to becoming a homeowner.
Awesome. Thank you so much for that, Jeff. Also, we want to introduce our partners. We have partnered with the City of Fresno, who is helping us in this initiative and being able to share this with all of our residents of the Fresno County area. Realtors of Fresno County, the organization that you're joined by today and led this initiative by, and Tri-Counties Bank. Thanks to Denise Ogata and her amazing skill set. We appreciate her and her partnership. She was partnered with us before in another previous company, and now she is with a company that follows her mission again and is continuing to be able to help our local residents. So thank you so much for your support and your efforts, Denise, with that as well. So we'll go ahead and hand over the platform to you, our home mortgage community specialist.
Hi, everyone. So hopefully we can give you a little bit of information today on a few loan programs that are out there. And I'll have you go to the next slide. Okay, so the WISH program is something that I'm very passionate about. In my years in this business, it's one of the best down payment assistance programs I've seen. It's a 4-for-1 product. So for every $1 you come in with, you get 4 from WISH or the Federal Home Loan Bank, up to a max of $29,000. So if you come in with $7,250, you would get the max of $29,000. You live in the house for 5 years, and the $29,000 is fully forgiven. The way they forgive that is, let's say you sell or rent your house out before the 5 years is up. 20% per year is forgiven, and then you would repay the remaining back. And there is no interest on that program. Currently, you have to qualify for either a or a conventional home ready or home possible mortgage, and the WISH program would be considered a second. It can be layered with other down payment and grant programs as long as those programs allow. So there's no payment on it. You just make the first if you have the WISH program. It is for first-time home buyers only. And the definition of a first-time home buyer is you haven't owned a home in the last 3 years. Let's see. Okay, next slide. Perfect. Tri-County also has the National Asian American Coalition Down Payment Assistance Program. It is for first-time with the same qualification as haven't owned a home in the last 3 years. You must be at or below 80% of the median HUD income. There's no payback of the grant if you stay in the home for 5 years. It kind of mirrors the WISH program, as 20% per year is forgiven. You can get up to 3% of the purchase price of the home or up to $10,000. There's no payments required on this one either. For both this and the WISH program, you do have to take a first-time homebuyers class, either in person or online, that's HUD approved. Next slide. Okay, and then there's one other program, assistance program that Tri-County has, and it's the Homeowners Access Program. It's basically designed to increase home ownership in historically disadvantaged communities. Approved customers receive a closing cost credit at up to 3% of the loan, up to $7,500. The credit can be used to cover closing costs or prepaids, and or to buy down discount points in order to reduce the interest rate. In order to qualify for this program, the property must be in a designated majority Black and or Hispanic within the Tri-Counties Bank assessment area. So basically you would call and say, hey, I'm interested in this house. Does it fit in this, fit in the income limit part of it? It must be owner occupied, and your income must be at or 150% of the area's median income. This purchase can be used for home purchases and refinances with costs and stuff when you go to refinance your house. This one can be layered in if they all qualify for the WISH. You could get this program and you can get the NAAC program. This program at closing, the 3% or $7,500, whichever is less, is forgiven at closing. Okay, so there's nothing. It is a grant, a true grant on that program. Next slide. So now I know I went through that quick. I told him it'd only take me 5 minutes.
Yes, you did.
I'm open for questions.
Okay, so yeah.
Probably the best.
Yes, let's get into some of the questions we have, and hopefully we have some more attendees that have other questions that we can give them some clarity on in regards to it, because we may have some folks that are joined with us today that don't know much about the loan programs in general as far as how the process works, what information they may need to be able to submit or need to submit to be able to be qualified, how long that process may take as far as a turnaround time to having for being qualified, and then actually starting the process. But let's go ahead and go through some of these questions first, and then we can get a little bit more clarity. In regards, the first question we have is from Mitch. Do you know anyone who could benefit from this program? And then at the time, it was the first program that we had listed. Let's go right back. The WISH program. Either get them on today's call or take good notes to share the information with them. So is there anybody in particular that you would recommend this program to? Was that your question?
I really just meant that to encourage the people who are listening, that if they knew someone. But since I was here, I did have a question. I know that there were a couple of things mentioned about the median income. The WISH program was 80% of the median income, and then the last program was 150% of the median income. What is the median income to a person who has no idea what that means? And I'm talking about myself.
Okay, so HUD has on their website, they have two different ones. There's one that's just the median income for Fresno County, and then there's per family size. Regarding the WISH and the NAAC program, both of those are it's the WISH is off of family size. So depending upon how many people are in your family will determine what the median income is. So right now, for a family of 4, the max income you could make is $62,320. Let's say you're just one person. Then the max amount you could make per year is $43,680. Now, for the NAAC, which is just the median, 80% of just the median income for Fresno County is, hold on one second. So the max is 58,320 that you can make. And it's kind of off of generally a family of 4 is how they look at it as the average for what the family size is. So you've got to fall in between, you've got to fall below those limits for each of the programs to be layered. So we take each program on its own and seeing which ones you would fit into. Does that make sense?
It does. I think I have it. So if I'm looking at the WISH program, if my family, they need to make roughly 62,000 or less, is there a way of telling me that if we're at 62,000 and let's say our debt to income ratio is where it needs to be, and I know that's speculative and our credit's where it needs to be, at 62,000, basically what amount home would we be able to purchase at that rate?
Okay, so basically you are looking at a payment just for housing, not taking your debt, because your debt would come into consideration into those ratios. But for a housing, roughly, if you had minimal debt, you could afford about a $1,980 house payment, which includes principal, interest, taxes, and insurance, and PMI, mortgage insurance, which would put you at about $275 roughly, with the 29,000 in WISH and you coming in with a 7,250.
Got it. That's helpful. Thank you, Denise.
Okay.
Yes, that was a helpful question. Lionel did ask about the 80% HUD median income amount, which you also addressed. And then on the third program that you reviewed, the Homeownership Access Program, you said it was a true grant. Can you explain what you mean by a true grant?
Okay, a true grant is forgiven at closing. So it's not a lien on the house. Once the loan closes, you just get that money. You don't have to pay it back, nothing like that. Once you close, that money's just, it's yours to be used for the closing costs or prepaids, so you don't have to come in. So it's like money that that you're getting credit for, that you have to pay those items. Now, neither one of those grants can be used on the WISH program as your contribution of your 7,250 to get the max 29,000. You have to come in with your own funds, or they can be a gift from a family member, but you have to come in. You can't use the grant funds to cover your share of what you need to come in for the matching for the WISH grant.
Okay.
And
So
the WISH grant is considered, it's considered a grant because 20% per year is forgiven and you don't have to pay it back.
okay. So with the WISH funds, how much minimum do you have to come in with to be able to, how does that work as far as the granted monies goes?
Okay, so let's say you came in with, you have $2,000. So 2 times 4 is 8. So you could get $8,000 in the WISH funds, and then you come in with 2. So combined, you've got like $10,000. It's not that you have to come in with the full 7,250.
Got it. Okay. I think that clarifies a bit. And with the NAAC, what would that look like? As far as the down payment?
Okay, the NAAC, what would happen is then all of the wish funds would be used as down payment. Okay, and then the 3% would be used towards, and probably your funds would be used for down payment. So that's the equity in the home from the sales price to the loan amount. So that gets you a lower loan amount. The 3% or up to 10,000 usually covers closing costs and prepaids. Okay, so then that's what that portion would cover. Now, if you qualify for the NAAC and the homeownership access, then what would happen is the wish, the NAAC, and your portion would all go towards down payment, because the homeownership can only be used for closing costs and prepaids. Okay, so it can't go towards down payment. So then that section. So then you could end up with the wish, your portion of what you use for wish, and the NAAC all going towards down payment assistance to lower that, to get a lower loan amount, to technically get a lower payment.
So then pretty much some of these programs can be used in conjunction with others, and you call it layering. Can you share,
Right.
just for clarity, which programs can be layered with another, and with what programs to help purchase the home?
You know, that gets a little sticky. Like, all three of these can be layered together. Okay, you can use them all in conjunction. And in reality, we could use the Fresno County HAP program. You could layer with that one. You could layer the wish and the NAAC. You could layer those programs together with the HAP program, okay, to possibly get more. And depending upon where you're looking to buy, because even the HAP program, that's more Fresno County islands that you buy it. Okay, so basically, if you're looking at saying what's a Fresno County island, usually that's a neighborhood that doesn't have sidewalks.
Okay.
That's a quick thing. I mean, without looking it up, you could say, oops, if it doesn't have sidewalks, we have a chance that it's a Fresno, it's a county island. It does also do a few of the outlying areas, but each of the outlying areas, Kerman, Orange Cove, Sanger, also have other down payment assistance programs that you might be eligible for. And we can layer with most of those. So, it can get creative, but you also have to remember, with each program, there are different guidelines as to the recapture or how you pay it back. Okay, a lot of the county ones you have to pay back at the end of the 30 years or when you pay off your loan. Okay, you have to pay back what you borrowed from them, where these programs aren't part of that. Some of them you have to pay back part of your equity that you make, the difference between what you paid for the house and what you sell it for. So those are different little things you need to make sure of when you get those programs, because not all programs are for everybody. You also have to look at what your intentions are and what your plans are, at least today. Not to say in 5 to 7 years, things are going to change. Family size, life, whatever could change how you do the outlook. But what your intentions are or your plans are today, to how that could affect each program, could affect what happens with that house when you go to sell it.
So questions being asked, can you layer the HAP program with all three of the programs that are mentioned today?
Yes, if you fit in all the buckets for each one, yes, you could.
Awesome. Another question was asked is what happens if the closing costs are less than all grants received? Do they go towards the principal?
Okay, so the home access, no. Then you would get less than that amount. Or we would buy down the rate, depending upon how much is left. We would buy down the rate to use it so you could get a little bit lower payment, so you can afford the house more.
Can you clarify what buy down the rate means for those that are not aware?
Okay, so let's say today's rate is 7%. Okay, your payment is figured, principal and interest is figured off of 7%. But you could pay 1 point or 1% of your loan amount and buy down the rate 0.25% to 6.75 and maybe lower your payment $40 or $50 a month. Okay, and that could help you qualify better and make the payment more comfortable for you. You know, and those are different things that you can use extra money. Buying down can be a good thing. Buying down too much, you could be wasting money. So those are things you need to talk with your loan officer to say, okay, is it worth it or is it not worth it? Okay, because we don't want to throw away money. When it's coming from the grant, that's one thing. When it's coming from your pocket, that's a whole different story. Okay, because you may end up paying $2,000 and you're saving, $18 a month, and it's going to take you 10, 12 years to make up that difference. Well, that's probably not the best place to put your money. You might have been better off if you really wanted to contribute that to the loan in some way, is maybe put it towards your principal balance or save it to lower your payment a little bit in the beginning, or save it for a rainy day, depending upon what you have in reserves. Because when you move into a house, you might want to paint it, you might want new carpet, new drapes. So that gives you that little bit of fun money to do it, and in case something goes wrong.
Got it.
Okay.
Another question asked by Sergio is if someone is over these amounts, they are not open to these programs. Sergio, do you want to clarify your question? Are you able to unmute yourself?
I responded to him, and Sergio, jump in if you are still here. What I thought is each program said where you could be at financially. Like say for the WISH program, you had to be at 80% of the median income, which is 62,000. I believe Sergio's question is, if I make more than that, are they not open to any of these programs? I think he was trying to find out what's open to someone who might make more.
Okay, so depending upon, we're only covering a few programs. Okay, I will tell you, there's a lot of different programs out there that there may be. I'm not going to say there is, because it depends upon everyone's income, but there may be other options. Yes, I'm not saying these are the only options. Okay, these are the options we're covering today, but to make over those, yes, there are other options, and there are currently other down payment assistance available.
I know we ran through a scenario between us in regards to the home access program. Do you mind sharing the income amounts for that? I know we talked about maybe a family of 4 and what that would allow them to make as income to qualify.
Okay, so for the home access in Fresno County, because each county is different, you could make up to $109,350 a year.
Okay. Great.
And some programs are household income. And some programs are just who's on the loan. So it just kind of depends upon how we have to structure it to qualify, one, where you're comfortable and where you can get into the house that you're looking for.
Right.
But we remember we have to make that house payment comfortable for you. So we look at things in that respect. So each situation is different. These aren't the only programs available, but these are the main ones today that we're covering.
Got you. And so some of the questions may be very specific to one person's needs or their particular circumstance. And in that case, would it be best to contact you to find out what they could potentially qualify for?
Yes. Mm-hmm. Yeah,
Okay.
they can give me a call and then we can go over their scenario, their income, how much they have saved to figure out which programs best fit them.
And in your experience, have you been able to qualify someone who may be, like, for example, qualified for Section 8 program for some type of a program? And I guess
Yes.
I would assume, like, maybe.
I mean, I'm not saying it's always easy. Okay. But yes, we have gotten some that were on Section 8 and we were able to get them into the house. I'm going to be very honest. It's with where the house prices are now, I have noticed it's getting more difficult. But remember, nothing is, if you've got time and you're doing the work that you need to qualify for a home, nothing is impossible. Sometimes it's just patience. The house or the property may not be available today. You do a few things and guess what? 6 months, a year from now, it's available. If you have the patience and you're willing to work with it, it usually comes through. I don't know how to say that, but it really does. As long as if you get fixed on, I want it today, it may not be today. It may not be till tomorrow, but eventually it seems like we all get there. I have people I've worked with for 5 and 10 years. And then all of a sudden one day, the right property, the right scenario all comes together. And they're ecstatic, patience is the best word I can say for that,
Yes, most
but it's
definitely.
achievable.
And I know a lot of us are working together alongside with our clients to get them ready to go and purchased. And I have several clients that I'm working with that their game plan isn't a plan for them to close within the next 30 days. Some of us were game planning 6 months, a year down the line, to give them some time to work on the things, whether it's income, increasing their income amount, savings, whether it's just saving more money to be able to put down or to be able to be competitive buyer. And then others are the credit score. They have everything else in place, but they just didn't their focus wasn't on their credit score. It was just month to month living and their expenses. And now they're at a point where it's like, okay, now they have to focus on their credit score. For example, I have a client that I met with last month, and sat them down with the lender, reviewed their financial circumstance, and they were about 100 points off from being able to qualify for a program. So they worked at it, and we were able to take a look at what credit cards they needed to pay down or what things they needed to pay off. It wasn't everything that they had that needed to be paid off, but there were a few items that were going to have enough weight to be able to get their credit score to what they needed. And now they're qualified. So within a month, they took it very seriously. They reviewed the items that they were able to pay down. They paid down those, and then they contacted those creditors to get it a letter for them and provided that to the lender to get a rescore. So now their rescore came back. And I got to tell you, they're just 2 points off from being able to go conventional.
They're almost there.
points off. So they're available, they're able to start looking for homes right now. However, as we continue to look, we're going to hope that we can get those other 2 points brought up so that they can be able to qualify in a better position and have more purchase power. So and mind you, that was just and it's case by case. Everybody's credit score, everybody's finances, everybody's income will be different. But in that particular case, it was about a month time frame to get that big of a leap to where they're qualified and ready to buy. Now it's just getting them that extra two points to be able to qualify for even like down payment assistance or something that might give them a
But
little.
you know, they did what they needed to. The first step is you've got to talk to a lender that you're comfortable with and get pre-approved. Whether you're ready to buy today or not, you've got to get pre-approved to see what steps you may need to take. What's so amazing is I have people that say, okay, we're not looking for a year or so, but you know, we just want to see where we fit. We get them pre-approved, and then all of a sudden a program comes up. Okay. The perfect example would be the Calhaffa one that just came up that was gone in 7 working days, 11 total days. Okay. Those people that were able to get in that program had already been pre-approved. So they knew when they heard about the program. New programs come out every day. When it comes to down payment assistance, you have to look at it as that's money that's not there all the time. It's money that came up. It's excess money that they're able to offer. So it's a limited amount of funds. But if you've been pre-qualified for your lender, when those programs come up, they can run your figures and say, hey, this program's coming out, or it came out today, you would qualify. You know what? This is where you would be. Maybe you want to start looking. At that point, you can decide, yes, this program's for me or not. But at least you're in a position to go forward, and you've already worked with the lender to get that pre-approval letter to go looking at houses. If you haven't been to the lender already, in actuality, you're kind of behind the 8 ball, because you still have to get them your documents and everything to get pre-approved to go look at. And in that meantime, those funds could be already starting to go out. You know, and until you talk to someone, you hear everything and all kinds of different things in purchasing a home. And let me tell you, there's a lot of different stories out there. Just remember, every situation is different. I've been doing this for almost 40 years, and I don't think in all that time, there's 2 identical. There's always something that's different that makes the situation different for each person. I mean, I've heard people say, I got a 1% rate. Well, that sounded really good. My borrower comes to me and says, why can't you give me 1%? Because it doesn't exist. It's not out there. Then they ended up going back, and it was 1% on something else, and you know, the miscommunication. So just remember, you've got to do for your situation, and then go from there. You might hear about other down payment assistance. Question your lender at that point. Do you know about this? Do you think I would fit into it? Those different things to see where you're at. But until you go to a lender, you can't ask those questions. Because most people think they don't qualify because of some reason that they've heard, and in reality, they do. And where rents are now, we're starting to get to a point where rents and house payments could be the same. Why build that equity for your landlord when you could be building that equity for yourself?
Most definitely agree. Preach. Can you share what information you would need from an individual to be able to get them qualified?
Usually there's the basic things to help get pre-qualified, and that is a copy of your 2 most recent pay stubs, 2 months bank statements, all pages, and your last 2 years full tax returns with W-2s and any 1099s or anything like that. You have those, it's 222, pay stub, tax returns, and bank statements. That should be able to get you so you can at least get pre-approved and get started. From there, for the lender, it's like putting a puzzle together. Something on this will make a question, so then we've got to get more documentation. But those basics will get you started. And at least be able to get pre-approved and to use it with facts than with hypotheticals.
And once they're approved, we go shopping. And once we find a home, what is the next steps that you have to work on, or that you may need to check back in with the buyers on in the process of buying?
Usually, okay, so once you find a property and the offer gets accepted and everybody's happy, then your lender's going to be your biggest pain. Because your lender's going to ask you for updated pay stubs. They're going to ask you for updated bank statements. Everything has to be figure within, 15 to 30 days. Okay. So we're just going to be asking for all kinds of things. And that's when those other questions come in. If there's anything rather than your regular deposits, we're going to ask where the money comes from. Where did you get that money? We're going to need the proof, or we won't be able to use those monies. If you have certain debts and they're not on your credit report, we're going to ask you to explain it. We're going to have you write lots of letters. And believe me, as a loan officer, I don't want to have to ask you. I'd prefer you tell me and we go. Unfortunately, the underwriters, they say that doesn't work and my word doesn't count. They want it in writing from the borrower. And it's not that they're doing it to be just to find every little thing, although it feels like it. They need that so that they can get the loan insured when it closes, so there aren't other issues. So believe me, if we didn't need documentation, if the underwriter didn't need it, we wouldn't ask for it, because all that is more work for us. But as long as we put that puzzle together and it's complete, everything's covered, all the pieces are there, we're good to go. And it's just, I always say, just roll with the flow on it, because we're going to ask. Nothing should be where it has to be given right then. Now, don't get me wrong, as a lender, that helps because we can move on quicker. But, even if it's later that night or tomorrow, the sooner you get it to them, the sooner you can get your approval, your full approval, so you can go to loan docs and close. But a lot of that we try and take care of in the pre-approval, so you're not rushing around to get those items.
Great. A question that's being asked is, how long does it take to hear from the lender after they've pulled your credit?
To hear from the lender after they pulled your credit?
So once they approve you, how long does it take? Once they pull
Get
credit?
Pre-approved?
Yeah.
Okay,
A
usually
decision. How long does it take? How long does it take to get a decision?
Thank you, Mitch.
okay. Once you have all the documentation, if the lender has all the documentation when they get the contract, they can usually send it in then to get approval. The appraisal, usually your first approval coming out will be without the appraisal. So it'll be approved pending the appraisal, because the appraiser takes longer. Okay, so usually within 5 days, sometimes 10, you'll have your approval on your credit package or your income, your credit, and that. Then they're just waiting for the appraisal to come in to make sure there's no condition and it makes value of the sales price to go in. Once you have that, then you're close to closing. So usually within, I would say, 10, 15 days, you should probably have your full approval, max 20, to make a 30-day closing.
If I could ask a question, if I'm applying for a mortgage loan, just to find out if I qualify, how long does it take to get a decision for that, to find out if I'm eligible for a pre-approval letter?
To get a pre-approval letter, usually by the time you hang up the phone with the lender and they get a full application, if you send them your documents, like I said, the 2 months pay stubs, bank statements, and tax returns and W-2s, they should be able to run a DU max, I would say 24 hours in case there's a few hiccups or whatever that they have to work through. I mean, it's the computer, so sometimes systems are down. Sometimes, like I had last night, inputter error, that you've got to go look through and make sure your I's are dotted and your T's are crossed. But I would say usually, within a few hours to 24 hours
So it's a pretty quick turnaround to find out if you're approved,
for a pre-approval.
right? Or if there's a little bit of work that needs to be done.
Correct.
And could you share, like, in the amount, like if you were to say like a ballpark range, out of the folks that you do that do apply, how many of those end up being qualified, whether it's for $1 or 100,000? How much, how often, what would you say?
Okay, that's a trick question.
Okay.
Okay. And the reason why I say we can usually get everybody qualified.
Okay.
Okay. Unless there's credit issues. Okay, then that's going to take a little bit of time. But people usually know if they've got credit issues, that sometimes they'll tell me what those credit issues are that they know. So we try and have them fix them before we run the credit report. Because when you run the credit report, that's going to lower your scores about 5 points. Okay, so we don't want to have to be running it all the time. Okay, but you have to run the credit report to get a pre-approval. So once we have a credit report that's okay, so I would say 620 or above, you can usually get an approval even if it's for 50,000. Okay, I'm not saying you can find a house, but you can get a pre-approval for that. And then your pre-approval may be contingent upon proof of funds. Maybe they didn't have enough, and we don't have the gift letter in hand. So we've got to figure out where those funds are coming from. Everybody deserves a home and everybody can buy a home. What that price range is, it's more of getting them qualified for what price of house is out there now and how to meet that goal. And that's where some of these down payment assistance programs and stuff can really help.
Okay. If a person needs help with credit issues, is that something you can help with, or do you have names of any reputable credit agencies that they can turn to?
Certain ones I'm not a credit repair person, by all means, not at all. I can give my opinion, doesn't mean you have to take it. And then I do have someone that I do refer to that has been very helpful to my clients.
Do you mind sharing who that is?
It's Ali Rubalakava.
We know Allie. We've actually had her present 2 months ago. She shared and talked about credit counseling and her services, and then just all things credit for folks to keep in consideration. So yes, Allie is a great resource, and we can add that to that email that we send out with her contact information in case anybody would like to reach out to a credit counseling company for assistance. But yeah, okay, that's great to know. Definitely.
Yeah, no, I've done some seminars and stuff with her. I really like Allie. She's very fair, and the clients seem to appreciate her.
Awesome, great. Is there any other questions our Realtors team or any of our attendees may have for our expert in regards to all things lending and the programs that she may have covered? If not, no worries. We will be again sending out a link with a few bits of information, the Zoom video that you guys have just for the presentation that we are on today. And then we will also send the contact information for Denise so that you guys can start your process. And then also can be paired with a Realtors team member in case you would like to go ahead and get started working with a realtor for your journey in home buying. Lionel, do you have any other questions, or Mitch? Tasha, I'm sorry, did you have any questions? I thought your mic was off. Okay. No, so it looks like we've covered all of the questions in regards to the programs that have been presented today. Again, that contact information will be going out shortly after this meeting, and we will upload this video to YouTube so you can always have access to that there. Thank you guys all for joining us. I'm going to hand it back over to our chaplain, Mitch Shaw. We will have another workshop next month. Get that up for you. So our next one, it will be June 10th. And then we have one again every month, one Saturday a month from 11 to 12 a.m. for the remainder of the year. And again, this is to help you guys stay on track for those of you who have some work to do or just are not ready to purchase. We will continue to bring experts on to share about loan programs that are become available or are available, as well as all things financial literacy and home buying workshops. If you'd like to schedule a one-on-one with one of our Realtors agents so that we can have a buyer's consultation for you to go over the full process of home buying and what things that you need to keep into consideration in such certain circumstances, such as how much funds you need to come in to put down, or even having access to apps to be able to start your home search. We will also list our Realtors team and their contact information in there. We can partner you with someone, or you can just reach out to the partner, to the Realtors agent yourself. If there's someone in particular, or if you'd like to interview a few to decide who you'd like to work with. And of course, you are more than welcome to use another agent outside of our program. We just like to provide as much resources to you as possible for your home buying journey. With that said, I'll hand it over to our chaplain, Mitch Shaw. And Mitch, will you pray us out?
Thank you, everybody, for being here. God, we thank you for the information that was shared today. We thank you for our speaker. We know that presenting like she did was not easy. Denise did a great job, and we thank you for that. We pray a blessing over her home, her business, her life. God, we thank you for the shelter that we have now. Even though we are trying to become homeowners, we're grateful that we have a roof over our heads right now, God. Again, I thank you for hope for everyone that is here. And I declare that there will be homeowners that will be birthed from this. And because that there are new homeowners, that there will be family members that will go to college, that there will be businesses that there will be started, that our city will be changed for the better. So thank you for this exchange of information. Thank you for our leadership. And thank you for each person that attended. Give them hope. In the name of your son, Jesus, amen.
Amen. Thank you so much, Mitch. And thank you guys all for joining us today. Until next time.